Hello. Welcome to the Michael Rains channel. I'm obviously Michael Rains. And in today's video, we want to talk about 5 ways to diversify. Let's just get right into it. The first way would be to invest in the stock market. This is going to help you with like a prosperity. If the economy is going through prosperity, you can participate. Second way to diversify is to own bonds. Longer term bonds probably are better for this type of thing, but when you invest in bonds, what you're doing is protecting yourself from a deflation. If the economy goes through a deflationary environment, your bonds will provide income when cash is scarce. The third way, since we brought up cash, is to have some cash lying around, and it doesn't have to just be in cash. You can have T-bills or money market fund. There's a lot of different ways to invest in cash. And the fourth way is precious metals. Precious metals are going to give you protection against any kind of inflationary environment, gold and silver, and you can own ETF, mining stocks, bullion. That's my favorite way. Lots of ways to participate in precious metals. And the fifth way is real estate. And real estate is tied to the economy if it's a prosperity or a recession or whatever, but it's also about location. So real estate kind of moves on its own, and obviously you can own a rental, or you can invest in a real estate investment trust or REIT, or you can house hack where you live on one side of the duplex and rent out on the other side. But a lot of folks, when I talk to folks, they think they're diversified because they get into the stock market and they own, I'm in pharmaceuticals and I'm in farm equipment. Well, yeah, that's a form of diversification, but you're basically relying on the stock market to go up. What if stocks as a whole go down? And that's why we want to be in these different asset classes. That's what's going to really give us the diversification. It's not just being in different sectors of the stock market. Yes, you can make a case that, you can even make a case if you buy a particular investment and you just dollar cost average, which means you just buy it over time. You've gotten in all different kinds of price points. In a way, with that one particular stock, let's say, yeah, you're somewhat diversified on price, but everything's tied to that investment. Same thing with the sectors, that's tied to the stock market. So to get true diversification, you want to be in different asset classes. And there's been times where I've owned all 5 of these at the same time. And as a bonus, let's get into some other ways to diversify. You got annuities, you have, you can fat invest, you can be in the cryptocurrencies, which I'm not really counting that because economically it's not proven. We haven't really found a way, to say like, in recessions, cryptocurrencies do good, or, in a prosperity, cryptocurrencies do good. So I'm not really going to count cryptocurrencies, but that could be a way, and then there's owning your own business. That's a way you can diversify your assets. Owning collectibles, maybe you breed dogs, maybe you decide you want to own a fast racehorse. There's so many different ways to spread your assets around and have a strong portfolio. And typically, if you're well diversified, no matter what if you set yourself up right, no matter what the economy experiences, you're going to do okay in at least one particular sector. I know, a lot of folks and entrepreneurs and wealthy people that have made it big time. They'll say, don't diversify. You just got to go in and go hard at one thing. Well, usually if you look at what they didn't get to where they're at from just being in one asset class. They own the business or were involved with the particular company, and that one particular company that they had their hands in made their fortune. So I think it's incredibly risky to just be tied down to one asset class And diversification is going to allow you to protect yourself and even prosper when its turn is up. So if you're experiencing a recession and your cash is doing well, your stocks might not be doing well, but your cash portion of your portfolio is doing well. And maybe if you like to think ahead, maybe you take some of that cash and put it into stocks that are low at the time. Or if you notice in your neighborhood, price of houses are really low, or you get a deal, or you find a opportunity you can't afford to miss, or maybe you're just looking for income and you own like a bunch of bonds and you own a bunch of dividend stocks. You're kind of getting your passive income, but there's infinite amount of ways to be diversified. And when I discuss with people, typically people are really heavy in one asset class and they haven't really thought the economy through and the economics through. So this is how I diversify my assets, and I hope you found it helpful. All right.